The U.S. housing market is witnessing a resurgence of buyer activity. After a period of relative calm, buyers are back with a vengeance. This renewed interest is evident in the rising number of mortgage applications. Google searches for homes for sale are also up, indicating a strong desire for homeownership. This surge in activity signals a potential shift in market dynamics. The increase in buyer activity can be attributed to several factors. Pent-up demand from the past year is finally being unleashed. Low interest rates continue to make homeownership attractive. Furthermore, the desire for more space and the rise of remote work have fueled the demand for housing. This uptick in buyer activity is a positive sign for the housing market. It suggests that despite economic uncertainties, the dream of homeownership remains alive and well. However, it also raises questions about affordability and inventory, which continue to be pressing concerns. The coming months will be crucial in determining the trajectory of the U.S. housing market. Will this surge in buyer activity translate into a sustained recovery, or will it be short-lived? Only time will tell. Mortgage rates have always played a pivotal role in the U.S. housing market. When rates are low, borrowing becomes cheaper, making homeownership more accessible. This is precisely what we are witnessing in the current market. After a period of volatility, mortgage rates have been on a downward trend in recent weeks. This decline in mortgage rates, however, is not a cause for unqualified celebration. While it does make homes more affordable for some, it also presents challenges. The lower rates have fueled a surge in demand, putting upward pressure on home prices. This is particularly problematic in markets with limited inventory, where competition is already fierce. The impact of lower mortgage rates is a double-edged sword. On the one hand, it makes homeownership attainable for more people. On the other hand, it exacerbates affordability issues in markets grappling with limited supply. This delicate balance underscores the need for a multifaceted approach to address the challenges in the housing market. As we move forward, it's crucial to monitor how mortgage rates evolve and their impact on both buyers and sellers. Will the downward trend continue, or will rates rebound? The answer to this question will undoubtedly shape the future of the U.S. housing market. The U.S. housing market is currently grappling with a peculiar paradox. On the one hand, buyer activity is surging, as evidenced by increased mortgage applications and online searches for homes. On the other hand, pending home sales, which reflect the number of homes that have gone under contract, have been declining. This apparent contradiction can be attributed to a confluence of factors. The recent decline in mortgage rates has undoubtedly spurred buyer interest. However, it has also created a sense of urgency, leading to a more competitive market. Many buyers are finding themselves priced out of certain areas or outbid by cash buyers. Another contributing factor is the ongoing inventory shortage. The supply of homes for sale remains woefully inadequate to meet the current demand. This scarcity is particularly acute in desirable neighborhoods and price ranges, further intensifying competition. As a result, while more buyers are entering the market, fewer are actually able to close deals. This divergence between buyer activity and sales highlights the complexities of the current market. It's not simply a matter of supply and demand, it's also about affordability, competition, and buyer sentiment. Navigating this market requires a nuanced understanding of these dynamics. Buyers need to be prepared for a competitive environment and be realistic about their expectations. Sellers, on the other hand, need to price their homes strategically to attract buyers in a rapidly evolving market. So let's talk about current rates and how they impact the real estate market. Right now, interest rates are at an all-time low, which means borrowing money is cheaper than ever. This can be a great opportunity for first-time home buyers or those looking to refinance. However, it's important to remember that low rates can also drive up demand, which might lead to higher property prices. So, while you might save on interest, you could end up paying more for the property itself. It's always a balance, and understanding this balance is key to making a smart investment decision. Now let's dive into the trends surrounding median sale prices. Over the past decade, we've seen significant shifts in the housing market. Understanding these trends can help you make informed decisions, whether you're buying or selling. So, what's driving these changes? Well, several factors come into play, including economic conditions, interest rates, and even seasonal variations. By analyzing these elements, we can gain a clearer picture of where the market is headed. When it comes to the U.S. housing market, regional variations are quite pronounced. Different areas can experience vastly different market conditions. For instance, Coastal cities often see higher property values compared to inland regions. Factors such as local economy, employment rates, and population growth all contribute to these regional differences. It's important to consider these variations when evaluating real estate opportunities. External factors play a crucial role in shaping buyer behavior. Things like government policies, economic stability, and even global events can influence how buyers approach the market. For example, changes in interest rates can either encourage or discourage home purchases. Additionally, economic downturns or booms can shift buyer priorities and spending power. Keeping an eye on these external factors can provide valuable insights for anyone involved in real estate. The U.S. housing market is often characterized by a mix of uncertainty and opportunity. While unpredictable factors can create challenges, they also open up new possibilities. Whether it's adapting to changing market conditions or capitalizing on emerging trends, there's always a way to navigate through the uncertainty. By staying informed and flexible, you can turn potential challenges into profitable opportunities. Thank you for watching. If you enjoyed this video, please like and subscribe to our channel for more updates on the U.S. housing market.